Hey guys, welcome back to Valareso Capital. On today's episode, we're gonna go through the weekly watch list and also we're gonna go through the market update. And what a crazy week that we had. It was an absolute volatile and wild price action that we had, especially on Friday. And on Thursday, we had some really big selling candles on the S&P 500. We're gonna go through the S&P 500. We're gonna take a look at the price structure and the market structure that is building after that huge sell-off that we had below the 200 daily moving average. So it's really important for us to understand that it doesn't matter if the market is going down. We are going to be able to make money as long as we are trading in the path of this resistance. So we have to understand that. So for this video, we're gonna take a look at the SPY to start, and then we're gonna go into the weekly watch list, and probably we're gonna also take a look at the XLF and try to understand what were actually the clues that we have in the financials that actually predicted or suggested that we were going to see a lot of sell-off, especially in the IWM, because remember that the IWM is one of the highest weighted indexes in terms of financials. So it's really important to understand that even though if you're feeling a little bit confused about what's happening with the financial sector, what's happening with the Silicon Valley Bank and everything that's going on right now in the financial markets, just understand that most of the time, all of that is already all of that information is already in the price action of the charts. So you don't need to know that something is going to happen to do well on the markets. You just need to follow the patterns, and that way you're going to put yourself in a position in which the probabilities favor that whatever the news are, you're going to be positioned on the correct side, meaning that you're going to be positioned on the path of least resistance. So let's just jump directly into the charts. And if you're new to the channel, remember to like and subscribe, and also follow me on my Twitter account at Valareso Capital. And remember guys that these videos are just for informational purposes only and are just based on my opinion and are not financial advice. So let's just jump right here into the SPY. And you can see right here, you can see the three selling candles. Let me just get my drawing tools. You can clearly see the three selling candles that we had, right? We had one here, we had a little bit of a pause day on Wednesday, and then we had that continuation on Thursday and on Friday. These are huge candles, by the way. These are really, you can see the expansive nature of these candles, which suggests that we're probably going to see a little bit more selling. Now, of course, we have to understand that when we are in these kind of situations, when we have a market that is driven by these very important news that we have to understand that if on Monday the Federal basically Powell decides that they're gonna do something about the Silicon Valley Bank, we could see a rally, right? We could see a very powerful rally to the upside, and probably we're gonna find resistance at that 200 daily moving average. So be aware that when we are having this kind of selling is usually when we see the most volatility. Now, what are the important things to know going into next week? First of all, we have to understand that we have CPI on Tuesday. So be really aware that that's going to be a very important data point that we're going to receive on Tuesday. Remember that the CPI number is one of the most important data that we receive every month. And also remember that we are also going to see PPI. I think is also next week. So be aware of those very important announcements that we have. And now let's just take a look at what the market structure is actually telling us. The market structure is pretty bearish. You can see right here that we continue to find sellers. You can see that we are forming the supply levels. So every time we have a week, I mark that price action as a supply level, because it's very important to understand that when we have a week, we have sellers or we have buyers if the week is basically the reverse of what we're seeing right now. So very important to understand it in terms of the TTM squeeze. The TTM squeeze had a squeeze pointing to the downside. Now the momentum is below zero, so that's really important for us to understand that the momentum also justifies what is happening in the price action. Now, what are the levels that we are going to be watching for the next week? So the first level of support is going to be 380. Basically, it's going to be 380 just based on the nature of these whole numbers that we see. Sometimes we find 400, 390. This level is going to be 380. We also have a Fibonacci level somewhere around 378.81. And that Fibonacci level is measured from this low right here all the way to the high that we had on February. So that's going to be the first extension, and that will basically complete the move to the downside that we're seeing. Now, that doesn't mean that the move has to stop right there, but that is probably going to be a very important level of support. And you can also see right here that we have buyers at that level. So I'm expecting to see a little bit of demand. So what is going to be my expectation? My expectation is that if we happen to see some sort of relief rally on Monday, we could actually see a very strong rally. If we happen to see any rally on Monday going all the way to 390, 390-ish, 391.40, that will be the level. I think that level is going to be found with with sellers. So let's just be really, really aware, because, and let me just hide this line right here. It's very important for us to understand that 390 is going to be a very important psychological level to the upside. So if we happen to see any rally on Monday, I wouldn't trust it, because if we happen to see some numbers that are not aligned with a bullish market on the CPI, then we're probably going to continue to see more selling. So basically the price structure is bearish, the expectation for next week is bearish, and the opportunity will be on a bounce. So if the market just decides to continue to sell, I think that it's better just to let it, because start to build exposure when we are really extended from the moving averages is not a high probability setup. So if we happen to continue to sell, I will just basically let the market to continue to sell until we find some support. But if we happen to see a rally, especially into this 200 daily moving average or somewhere around 390, then I think that will be an opportunity perhaps to start building a little bit of bearish exposure and then look for that continuation low all the way to 380. So that's going to be basically the analysis that we have on the spiders. Now, let me just go through the XLF, because I think it's really important for us to understand what were actually the clues about this. And you can see that I haven't done any work on this chart yet, but I think it's really, really important for us to understand that we were finding already a lot of sellers around this level right here. So the clues were already here in the market, right? The clues were already here telling us that the structure that we have, the bullish structure that we have in XLF, basically broke this day right here. And you can see that the squeeze was already printing to the downside. But remember that the most important thing is price action, and price action was already flagging below the moving averages. You can see right here that the price was already flagging below the moving averages. You can see that we had a very strong rejection at that 21 exponential moving average, and then basically what we saw was just continuation to the downside. So there is nothing to be surprised about this kind of sell-off, because the price action was already suggesting that XLF was already getting rejected at the moving averages. And if you're a student of the squeeze, you can see that the squeeze was already suggesting that we're probably going to see expansion to the downside. Now, probably I was not expecting this kind of sell-off, but given on the indicators and the price action, we were probably expecting at least a test of that 200 daily moving average. And that's what we got, and we got a little bit more. But just be aware that as long as you follow the price action, as long as you continue to trade in the direction of the moving averages, then one, you're going to be able to basically avoid building some bullish structure in the XLF, or you're going to participate in a possible move to the downside that like the one that we had this past week. So that's very, very important to understand. And now let's just jump into the watch list that we're going to have for next week. So let me just get my watch list right here. So it's going to be right here. So let's start here with the QQQ. This is going to be the first name that is going to be on my watch list. And you can see right here that I already have everything, all the levels ready. So what is actually the expectation for the QQQ? Since the most important chart, in my opinion, is the S&P 500, I always want to trade in the direction of the path of this resistance of the S&P 500. So if that path of this resistance continues to be to the downside, then I'm going to be looking for opportunities in very liquid names, including indexes, to position myself at points of resistance for a continuation to the downside. So if we apply that mentality, then we can see that right now the QQQ is extended from the moving averages that I tend to trade. Those moving averages are the 8 exponential moving average and the 21 exponential moving average. And if you are wondering what is the 8 exponential moving average and the 21 exponential moving average, I made a video on both of those moving averages, and you can find those links in the description, and also it should be popping right here in the screen right now. So the expectation for the Qs is actually to see a little bit of a bounce, right? If we happen to see a little bit of a bounce, perhaps into this 294 level, and also that 8 exponential and that 21 exponential moving average, I think that will be an amazing opportunity to build some bearish exposure and look for continuation all the way to this 280 level, and perhaps having a little bit of support at that 240, 284 level. So that's going to be the expectation. Look for a bounce in the Qs, and then perhaps a continuation to the downside first to this extension here, and then into this 280 level to the downside. So this is actually looking pretty bearish. You can see that we're finding a lot of sellers, and sellers continue to be in control. Now the next name that we're going to take a look at is going to be the SMH. Now the semis is actually really interesting because the semis were the ones that were holding up the best in the week that we were seeing. However, the price action now is suggesting that probably a pretty strong reversal is coming. Now, why I'm saying this? First of all, you can see right here that we had some sellers somewhere around this 250 level. And you can see right here when we had this rally to that 250 level, which happened to be a Fibonacci extension measured from this high right here to this low right here, we found a lot of sellers. The moment that we found a lot of sellers, we were instantly rejected. And then we end up closing below the moving averages. You can see right here that we're below the 21 exponential, below the 8 exponential, and also below the 30 daily moving average. You can also see that the squeeze is starting to point to the downside, meaning that most of the momentum that we're seeing suggests that the path of least resistance is going to be down. And now if you like patterns, you can see that we have kind of this bearish flag right here in the price action. So what is going to be the trade? The trade is actually waiting for a little bit of a rally into these moving averages. If we happen to find resistance at those moving averages, then the trade is going to be looking for a pullback all the way down here to 227. Probably we're going to see a little bit of support at this 50 daily moving average, but with this price structure, I'm expecting, the expectation is that moving average is not going to hold, and if we happen to move below this 50 daily moving average, then we can probably see a little bit of the selling intensified in the SMH. So the target will be down here to 227, and of course the idea is to short it as close to that 21 exponential moving average. That way you can manage risk appropriately in comparison to the reward that you're looking for in the trade. Now the next name that we have, let me just take a look. I have NVDA, and this one is actually looking pretty interesting. And if you are following me on my Twitter account, you know that I was actually trading NVIDIA to the bullish side, right? You can see I actually opened a position in NVIDIA in that pullback that we had to that 8 exponential moving average, and I was fortunate enough to sell it before we started to see that sell-off going into Thursday. So I was actually able to grab some exposure. I was able to sell my exposure in NVDA, and then of course you can see that right now we continue to sell to the downside. Now what is the expectation with this name? So let me show you here. Here when we have this kind of price action that is above the moving averages, right? You can see that NVIDIA continues to trade above the moving averages, but the SPY suggests more downside. Then I'm gonna start looking for some divergences in momentum. And I'm doing a lot of tweaks on the indicator that I use in momentum. So that's something that I'm gonna be talking about in the channel. And the interesting thing is that right here, you can see that we are starting to see a lot of divergence, meaning that we're starting to see this price going up, but the momentum continues to go down. And we're also in that bearish hemisphere below that midline. So the expectation is that actually this 21 exponential is not going to hold. If that happens, then we're probably gonna see a move all the way down to this 207.54, which is the gap that we had before the earnings announcement. So that's actually a pretty good, interesting trade that I'm gonna be watching for next week, but I will prefer to get this trade as close to the supply level right here, which is going to be somewhere around 235. If we happen to see a little bit of a bounce into that 235 level, I'm expecting to see a little bit of resistance, and the first target, of course, is going to be 220. But if we happen to see more than 207, that's going to be the final target for a bearish trade in NVDA. And then finally, let's take a look at Tesla. We were talking a lot about Tesla in the Twitter account. You can see basically momentum just continues to go to the downside. So that's actually pretty important to understand. But let's just take a look at the chart. And the chart, you can see right here that we have, this is actually very important, right? Because we can see that we have this head and shoulders stopping pattern. And after that move below 287, you can see that we actually have the confirmation that that pattern is triggering, and now we're seeing Tesla moving to the downside. So what is the trade? The trade actually in Tesla is going to be pretty easy. I don't want to short it right here, especially because we're really close to that 50 daily moving average, and perhaps we're going to see a little bit of support and a bounce. So my expectation is to see a little bit of a rally somewhere around 183 to 185. If we happen to see that bounce going into this declining 8 or probably into the declining 21 exponential, I think that will be a beautiful opportunity to short Tesla and look for a continuation to the downside, first into 160 and then ultimately into 146. That 146 level happens to be this gap that we have opened before earnings, and it also happens to be a very important Fibonacci retracement, which is basically the 0618 retracement measured from this low right here to this high right here. So the expectation is to see we have a little bit of a rally and then looking for a little bit more of continuation to the downside. And if you're a student of the squeeze, you can see that the squeeze is also pointing to the downside. So that's basically gonna be it for the video, guys. I just want to keep it short and sweet. It's very important to understand that right now in the environment that we have, it's really important to look at the SPY. To look at the SPY because most of the things right now are moving as a block. So if we see selling in the SPY, then we're gonna see probably selling in 90 to 95% of the stocks that trade that we like to trade in this kind of environment. And if we happen to see a little bit of upside in the SPY, then we're probably gonna see upside in most of the names, right? So be aware, most likely if the SPY is at resistance, most likely we're gonna see resistance in the stocks, and if the SPY is at support, we're most likely gonna see support in the stocks. So just as a summary, the path of least resistance is to the downside, and the names that I'm looking to short are gonna be the QQQ, it's gonna be SMH, Tesla, and also NVDA. Thank you once again, guys, and I will see you on future videos. Take care and bye bye.